the mortgage rate about 3 points above the 10-year lately.
All right.
I know that's more than the historical average. Usually it's more like 2% above the 10-year, but
Let's bring in a professional who does this stuff for a living. lisaknee, national leader of real estate practice at Eisner Amper, joins us live here in our Bloomberg Interactive Broker studio. What's the world to do with a mortgage rate of 7.55%? I mean, Matt's got his under 3. He's not doing anything.
So thank you for having me. Great question of where we're sitting. When we look at historic mortgage rates, we talked about this before. When I first bought my house 20 years ago, that was about what my rates were at, or about the 7s.
Yep.
And so when we look, we have some very, very artificially lower rates over the last 10 to 15 years. And so it's not really the mortgage rates, but it's pricing and figuring out what valuations are at. And that's really where the trick is. What are the values? We talked about supply. So because there's such little supply out there, it's going to be a little bit hard for people to understand and make those financing work with those mortgage rates. So if you're below 7 and you need to sell and move, there's really very little that you're going to go to pay a higher rate going forward. And that's where the supply is really going to hurt people who are looking to be first-time homeowners.
and most everyone's below 7. I mean, people have, what's the average right now? It's got to be between 3 and 4.
Probably, yeah. And it's going to be difficult to compel someone to sell their home to move to get something at a higher rate.
So what's the rate? I don't know. Don't want to call it a break-even rate, but what's the rate where you think the market frees up? That buyers say, "Oh, okay, I can stomach this."
The great reset is what we call that.
Is that what it is?
I mean, because so many people are holding on to their homes.
Yep.
They can't come to an agreement on price, right? Because if you want to buy my home, I'll sell it to you. I have a 3% mortgage, so I'm going to sell it to you for a hell of a lot more than I would normally ask. But you're not going to buy that because you need a 7% mortgage. So there's no movement, right?
Yep.
And Bloomberg, we call that the great reset here.
That's exactly right. And it's also figuring out what the real valuation is for your house. And so you think it's worth well and above what it should be because the numbers aren't penciling out based on those mortgage rates. So you want that cash buyer, that unicorn of the cash buyer, and be able to have them come and purchase your home. But again, it's you figuring out what you're willing to take for you to have to pay off your mortgage and move somewhere else, knowing that you're not getting that rate again.
Yep.
Well, I mean, so where are we, like, statistically? Is this like a abnormally low time for lack of transactions?
The transaction market, not just in the home mortgage, but in every commercial real estate, is at a standstill because people are trying to figure out where mortgage rates are going to be in the 10 years. So you mentioned it was 4.3. And so figuring out how long it's going to stay there and when are values going to start coming down. And then transactions should start picking up based on that. But until people really understand where values are going to be and we're sort of at that set, it's going to be difficult for transaction volume to pick up.
So we haven't seen, like, what I want to see is 1 or 2 kind of notable transactions in New York, for example, or San Francisco. And I want to see if the discount is 10%, 30%, 50%, 60%. I don't know where this market is for some of these big markets on the commercial real estate side. We haven't really seen much transact, have we?
The only thing we've seen is giving back to the banks, which we know didn't make smart investment sense for people to go, work those properties back in. And things that are going to start trading soon, it's not trading because there's no cash flow there. It's trading because the mortgage rates aren't working to pencil out those deals. And they just haven't happened yet because right now we're waiting for those mortgages to be up. We talked about, when are those fixes? Is it in 18 to 24 months? And that really might be the cycle of what we're looking for to see when those tradings are going to start happening.
What about building homes? I mean, are we bringing enough supply on in that way since there isn't enough supply in, previously owned homes?
So, correct, there wasn't enough supply in 2007 and 8. We stopped building homes, and so now there's a little bit more. But what they're doing is single-family rental because people aren't able to purchase their own homes. You now have these large companies who are coming and building single-asset homes or single homes, and people are renting them with the hope that they'll be able to buy them and build up their credit rating in the future.
But
That's
by the
happening
way,
in the Sun Belt.
there are a lot of people who will say, I don't want to buy a home. In fact, the cost of ownership, I think, is higher than most people realize.
Taxes.
A lot of times, rental is, taxes. Tell me about it in Westchester. There are a lot of people who say, look, I'd rather rent a home, and it's actually a better financial decision. I can invest my money elsewhere, and I'm better off.
And when you think about the generation now that's looking to buy homes, they're not looking at long-term thinkers. They're in the 1 to 2 year range. And so for them to purchase a home that they're going to be in for 30 years when we did our 30-year mortgages, they're not looking at that. They're looking for the 1 to 2 years where they're going to live and not really want to commit to something for that long-term purchase. And that's why that the single-family rental market is so hot right now.
How much of a problem is it going to be on the commercial real estate side when mortgages come due? I mean, because we've seen people like Brookfield, I mean, like major institutional real estate people turn the keys over. I mean, this isn't some mom and pop developer or owner. These are major global real estate players that are just saying, I just can't make it work.
So what they're bringing, why they're turning their keys over is they're making sound business decisions of saying, I can't have my investors, they have the cash to do it. They don't want their investors to invest back in to make those properties work, knowing that those have to be reset at a lower price per
reputational
foot.
risk there? I mean, you're a failure. You just turned over this trophy property in San Francisco to the banks. Now it's the bank's problem.
So they're making sound investment decisions of saying, I can't
Well,
pencil
from the
out
bank,
those
it's not
numbers.
sound to me.
Well, so when I mean, that's a fair point, but the banks are going to sit there and they're going to make sure that they work that out, and they're going to all make sure that those properties get repositioned in a smarter way, probably at a price that makes sense for that new developer to come in and reposition that property. So it is a sound investment decision if you're an investor from a Brookfield point of view.
It's going to take years, isn't it, for this commercial real estate market to sort itself out?
We at least need to see what's going to happen in the next 18 to 24 months. And when you talk about costs, the biggest cost people are complaining about besides interest rates is insurance. And that insurance market is really putting a strain on the pricing that's been coming up for people to make sure that they can make those deals work and pencil out. The percentage of insurance going up year over year has been astronomical from what we're hearing.
You know, people make a lot of money in real estate, commercial, residential, but man, when it's bad, when the tide turns, it is tough out there because everything conspires against you.
Yeah.
Lisaknee, thank you so much for joining us. Lisa is the partner and national tax leader for real estate practice at Eisner Advisory Group. Change your name. Okay, Eisner Advisory Group. Good stuff. All right, but you're sitting on your 3% mortgage. You don't have a care in the world.
Well, also, I can't move. I mean, I have a 2-year-old and one on the way, and a wife that would kill me if I even suggested it.
All right. We're going to get back to it in just moments. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it.